welcome to another stream. So in today's video, we are going to be checking out some of the interest rates shenanigans that I see going on. We'll cover some news, we'll cover the macro crypto market a little bit, and then we will get into your questions. What's up, Jaggy? Let's go, yeah. Shout out to Crypto Story, Alan Finn, for the latest subscription. So yeah, let's get right into this little chart we have here. So this chart is of the US 2-year yield, the bond. And this tracks, this is like a little cheat sheet that shows you how high the interest rates might go. And this is the weekly chart. I have then the US interest rates itself, which is the orange line over here. We have looked at this chart previously, as I shown you guys that this kind of shows where the interest rates might be going in the future. Now, this is relevant to us because when the Federal Reserve reduces interest rates, the market does well, right? When we have low interest rates, the market does incredibly well, and that's what you call a risk-on environment, which would mean that people speculate in the market, they get out of the US dollar as the US dollar is losing its value. So when interest rates are high, like we've seen recently when the Fed has started raising rates, that everything is pretty much crashing right across the board. Your other Forex pairs are suffering. Why can't you guys hear me? Seriously. Let me know, you guys, if you can hear me. Let me type in here. Let's see what you guys are saying. Hopefully you can hear me. Oh, okay, cool. So let's just continue. So the 2-year yield is how much you pay the US government a lump sum. There's 2-year yield, a 5-year yield, a 10-year yield. This just shows the confidence in the market. When the 2-year yield is high, people are speculating on the short term and not likely to speculate in the long term as they don't have a lot of confidence. So this is just a little cheat sheet that people have noticed, and we can see the correlation if we go back all the way to the 1989s when inflation was pretty high and the interest rates as high as well, as they tried to get it down. So just to run through it quickly, I put up the calculations up here. We had the interest rates, or excuse me, the US 2-year yield was as high as 9.91% you would have gotten on your bond, which you've purchased from the government. So you would almost get 10% yield on that bond that you held for 2 years, right? But the interest rates only got to 9.75%, which was quite high, almost 10% interest rates back then. So the difference we can see was 0.16. This was 1989, and they got the inflation down nice and low, and they reduced the rates all the way to 3%. Into the 90s, pretty much all the way to 93. Then again, we got inflation, and in 94, the US 2-year peaked at 7.7%, we can see here, and the interest rates peaked out at 6%. We can see the difference there of 1.7. Again, the pivot happened. They kept it pretty high at 5.2 for a while. And then again, rate hike started into the dot-com bubble, right, of 2000, they got the 2-year all the way up to 6.92%, almost at 7%, yet the interest rates, which is the flat one up here, was only taken up to 6.5. So we can start seeing a trend that the 2-year always peaked out above what the interest rates nominally was, right? So here the difference was 0.42, right? So now we get into the 2000s, and the peak here was at 5.283%. That's how much yield you would have gotten on the 2-year yield. But the interest rates only got to 5.25. So that's difference very close at 0.033, but we can see that it never got to negative, right? The 2-year yield was always higher. So the government would always pay you more than what the interest rates was. And then into 2008, we have this very low interest rate, high interest rate environment, only at 0.25, and then again rate hikes into the 2016s, the 2017s, and the 2018s. The 2-year yield got as high as almost 3%, 2.997, yet the interest rates peaked out at 2.5%. So the difference there is 0.5-ish, right? And then we get into our era that we're currently in, the virus area, when they brought down the interest rates all the way to 0.25. You can then see the 2-year yield yielding very low amounts. So you can just see how the interest rates kind of lag behind what the 2-year is doing. Now, we've recently topped out at 4.881% on the 2-year yield. And currently, the interest rate is sitting at 4.5. Now, difference there is 0.38. That would mean we can have another 25 basis point rate hike in the next cycle, and that is what the market is predicting. I can actually pull up the CME over here. While that's loading, we just continue. So we can have one more rate hike, but after that, if they rate hike another one, that would another 2.5%. That would be the first time in all of history that they have pushed the interest rate higher than what the yield was that the government would have paid you, which if we just go by previous data, I don't even know if that's possible, right? So it would be really interesting and very bullish for the market if they start pausing much earlier than was previously expected. And we can see here that it's almost 100% probability by the market that they are going to do a 25% basis point again. But this should be their last one. But obviously they do have hawkish speeches which they can pretty much rely on. And the next one, all the way to 5%, from 4.75 to 5%, is sitting at 80%. But if we go on that data, it does not seem like they can actually do this. Otherwise, it would be the first time in history that they've actually accomplished that, getting the interest rates higher than the 2-year yield has been. And you can see by May, it's highly probable that they'll just keep it at this level. And then by June, keeping it at that level. By July, keeping it at that level. September, keeping it at that level, but highly likely that we might even see a pivot by September. And by November, the market is expecting the pivot to start to happen. So yeah, this is very bullish for the market. And I haven't seen anybody talk about this, although I have people talk about the lagging effect that the interest rates have to the 2-year yield. So that would be interesting to see what actually happens if they will hike higher than what the 2-year yield was at. Otherwise, the 2-year yield would have to go higher. But if we look at the indicators and that market pattern, we've almost already broken down. I mean, these are bearish divergences all the way on the market, and we've got two. So this generally signifies the top. You can see indicators going lower here. The interest or the yield is going higher. Again here, MACD going down, yet the interest or the 2-year yield going higher. So these are topping signals, right? Which would mean a turnaround pretty soon. And we've actually broken down here, but got up above structure. We're literally just holding on to support, but I do expect this to break down. And there's your measured move. This will take the 2-year yield all the way down to 3.3%, 3.4%. So that's really interesting. Maybe they are going to break something, or something has already broken and they need to pivot. This is only phase 2 of the pivot. The first phase is the reduction in the rate hikes. So from 75 to 50 to 25, which we've been getting the past few times. Stage 2 is keeping it flat for a while. So we're expecting them to keep it flat at 4.75 because they can't go higher than that. It's up. Excuse me, I need to put it down here. $4.75 is over here. So one more rate hike in the books, and then stage 2 of the pivot. And as I've shown previously in the previous video, during those pauses, you tend to get a little bit of a risk on an environment. And this is probably what BTC and the rest of the market is taking into consideration, or pre-running that pivot. Also, interestingly enough, Bank of Canada raised the interest rates at 2.5 yesterday. You can see here the 25th of January, we're at the 26th of January, to 4.5, and now they said they are halting the rate hikes. So this is stage 2 of their pivot currently. We'll see what happens to the rest of the economy. TW0, nice to see you. AK, sounds fine. I can hear you. Now it's fine. Sound is fine. Bakfats, talk about this. Bakfats, okay, whatever that is. Jerry, Bakfats. Okay, so yeah, so let's get into what the rest of the market is telling us. We have the tether dominance. Remember, this was the higher this goes, the more people are sitting on the sidelines. This bearish divergence has now confirmed. So pretty much a breakdown across the board. This would mean more and more people are allocating positions, getting out of stable coins. The dollar strength, I mean, we've pretty much broken down completely, right? Next target is the 0.618. This is not a continuation area. This is a correction pretty much now. X, I don't think I'm going to talk about that today. We do have on the monthly, this is the cipher indicator down here. We have actually printed and it closes at the end of this month in 5 days. We have a green dot down here. This is a buy signal. The last time we got a monthly buy signal on the cipher was when the market had already bottomed back here. So another very bullish sign here. I don't use the cipher often, but it's just fun to look at it. So yeah, this is another bullish sign. And the last time before that we got it was in 2015. Although we got a green, a red, and then a green again, it just shows it doesn't really print quite often, especially when the indicators are this low. Let's see what it's saying on Ethereum. Yeah, it's also printed one on Ethereum on the monthly chart. The last time it did it was also back here in the it did print it twice. It actually got you out before COVID dump, and then we head off again. So there's definitely, and there could happen another sell in the accumulation phase. But this is positive to see. Let's just see if it holds up till the end of the month. I had something else that I wanted to show you guys yet I forgot now. Oh yeah, let's look at when the pivots or when the recent rate hikes happened. Do we have past history here? I'll just do a Google search. Because generally after the Fed announcements, we do have a little bit of a dump in the market. So we got one in December on the 13th. Let's go to BTC. So the 13th, we got a 25 basis point right here. And then we had a dump in the market. November the 1st was the one before that. A nice double top, and a few days later, 4 days later, we got this massive FTX dump. Then another announcement was in September. So the market tends to rally into these announcements and then dump down. September the 21st. Okay, so just a little bit of consolidation, but generally it has been not the greatest of times. So will we rally into that? It's only next week on Wednesday. We have the Fed announcement again, so expect a lot of volatility on this day. So there's still a little bit more upside to go. Many people are calling for the 25K area. This is the God market. The S&P, right? We're still battling with the support we made. This is called a Dragonfly Doji. This is very bullish. Let's see if we have continuation. It's pretty much important to look at what happens today. We do have bearish divergence forming on the RSI and the MACD, so we need to break above these levels so we can push these bars a little bit higher. Let me put in the chat if you guys want me to see if you want to have any other coins that you want me to take a look at. AK, Devil's Advocate, any reason why HEX won't touch its previous all-time highs at least? So let's play Devil's Advocate. Maybe the stock split, the HEX, BHEX and EHEX split, maybe that can cause it. What else? Maybe the SEC gets served by, or maybe HEX gets served by the SEC, but I don't know. I don't see how it will, because there's no, you can't cease and desist HEX because there's no company, so there's no one to stop working. It just lives on the ecosystem. We might not see a high versus BTC, because generally I only care about XBTC, X versus, or any altcoin versus BTC. So the stock split, I mean, maybe the community implodes. What else can happen? Maybe a bug, an inflation bug, but the code can't be changed. It's encapsulated. Generally, coins do kind of struggle to get above their all-time highs versus BTC, but because generally BTC still goes up in value, right? So you're not only trying to beat the value increase against BTC against US dollar, but against BTC's price appreciation as well. What else? I mean, a bug in the code. So yeah, I mean, there's a few different reasons. So the stock split, maybe it just literally just doubles the amount of hex circulating. Yeah, but there are some unforeseens. Maybe you can pair your two pairs on the pulse chain for some reason, because that was a lot of the narrative back then. So it could actually create another value proposition. You can stake your p hex and your hex together. Yeah, maybe the origin address dumps on us. Maybe it gets hacked. I mean, these are all like Richard Hart would say, imaginary horrible. I mean, an asteroid can hit Earth, right? And then we'll never get to the all-time high again. So you can imagine an infinite amount of horribles. Maybe Russia nukes the United States, right? Most of the world's value is in the United States. And if we don't have the United States participating in crypto, we probably won't go to all-time highs again. But that would be across the board. Maybe governments regulate crypto, so you can't offboard or you can't onboard onto fiat exchanges. There's another unimaginable horrible. The Duke, love your streams. Do you ever look at the silver chart? I can look at the silver chart for you quickly. Can you give me a ticker that you want me to take a look at? We'll just look at spot XAG. This is probably the one I would prefer because... Okay, so let's put on the log chart. This is the weekly chart of silver. Pretty much where you would be interested in this is... Let's just reverse that. I'm just gonna use the reload zone. I'll need to reverse it again. So value for something is always inside of the reload zone. This is where the institutions load up on any asset. This is two prices. We are now above that level. So this is not where value is at. This is called the nosebleed section. We can then, we have, it's not the best market structure. So this is a little bit extended up here if you want to wait. Personally, I would want to get this while it's in its reload zone. Maybe you can wait for the $20 area, 20.22 cents. Then you've got two overlaying reload zones inside of each other. That would be powerful. It's a little bit overvalued here. We do have bearish divergences. You can see indicators of going higher, yet the price is going lower on the weekly. That's not been confirmed yet, but it's the same on the RSI. Give me 1 second. What else can we look for? Maybe we can look for bullish divergences down here. So there was a little bit of bullish divergence here, which has now been confirmed. So this is why you got this upside move. and down here as well. From there to there, the price went down, yet the indicators, the MACD and the RSI went higher. You're pretty oversold or not really oversold, so there's definitely a more upside to go in silver. The RSI is not oversold at all. It's pretty much sitting at 60. I think the inflation trade is pretty much over right now. Let's look at silver versus gold. XUA. So this is, I should probably have put it the other way around. So we have gold on top. XAU USD divided by XAG USD. So you're getting 81 ounces of silver for gold. Yeah, definitely looks like silver wants to outperform gold. So value was down here at 67 ounces of silver per gold ounce. I hope this is in ounces. I would guess it's in ounces. If we pull up a shorter time frame reload zone, still a little bit overvalued. You've kind of missed the ratio trade. We can then look for divergences. No divergences yet. The RSI has a lot more room to go. So definitely silver to outperform gold in the next few years or months. I mean, resistance is all the way up here, so definitely a lot more room for silver to outperform. Yeah, so there you have it. I hope that was interesting. Can you look at the Texan token? Yeah, I can look at the Texan token for you. Up 3% on the day, and Hex on ETHW, sure. Let's put on the log chart. But this is starting to look a little bit better. This is the 4-hour chart, and don't know how it's going to look on the daily. This is a double bottom down here. RSI has formed. It's pretty low. Let's just look on the 4-hour. We're going to have a little bit more data there. You can even use the line chart. We have starting to get higher lows. We're close to breaking out here. You can see all of the W's, lots of W's, lots of higher lows. Large W here, right? I mean, this looks healthy. Definitely a little bit more room. If you break this area up here, this is actually the W down here, so you need to clear this area up here for this to go on a run. On the 4-hourly, RSI pretty high, the stochastic as well, so you might consolidate at this level. You would need to consolidate sideways here a bit. I mean, there's not much to say about this chart. it's so new, right? It's just a healthy correction from the launch phase. Definitely more upside on the daily. The RSI only printed here at 40. You do have this nice little W on the daily up here, but there's still a lot of room for that to break and then for a measured move to go. So yeah, it looks good. A little bit more upside, maybe consolidation, but on the daily, a lot more upside to go. And then you wanted HEX on ETHW. So the HEX ecosystem's doing quite well here. I mean, we recently made new lows. We're currently defending those areas. Down a lot, right? Down 95%. We just we need a lot of consolidation sideways in these areas. It's definitely where value is at, right? We always look for, as granny investors, for coins that are down 95%, which I just don't know what ETHW will be doing. Let's just quickly look at the ETHW price. And it's only trading on all of these obscure exchanges, right? So this is good. This is the weekly chart. And we had this nice little W here. We've broken out. We might come down to retest. This is very reliant on what ETHW does. So if it can stick around throughout the bear market or the bull market, I mean, I expect this, if it doesn't come to at least the 50% area, if it holds these bottoms down here, I could easily see it come back to at least the 50%. It's this log chart here. So there's so much room in this to go. Let's just see. We need more consolidation at these lows. Liquidity is only at 19k, so about 20k. Only a quarter of that wants to buy, so there's a lot of sells to get through. The share rate is still going higher, which is positive. You guys can hear my dogs. They now left, but I could have imagined that was probably pretty loud. Raymond, what's up, dude? The Duke, it's a pleasure. Do come again. Jaggy, nice, thanks. Yeah, so yeah, let's just get some good market structure. Let's get continued higher lows, and the longer this goes, the better. And maybe we can even see a W on the weekly. That would be powerful when that finally happens. People are still ending their stakes because the share rate is going higher. So it's definitely interest there. And lots of upside. If it just needs to continue, just build a base down here. I think we've pretty much covered everything. Let's quickly look at HEX because I've seen we've broken the 26-cent area. Lots of speculation on maybe we are going straight to Pulse Chain mainnet. And the reasons, I mean, I can't, how would you say? I kind of agree with why he would launch and not go to a testnet. Although he did state with this update that it is before testnet v3. But if he doesn't announce, then you don't give these people time to speculate on the price. And he's done that previously as well. With a big payday, no, it's not on this chart. He did defend the price with the origin address. He staked all of the origin address coins, or the OA staked all of the origin coins to make sure that those people that just gamed the big payday didn't get as much hex. Everybody would have gotten 100% on those stakes, but he staked and reduced that payout to only 30%. And if he didn't do that, the price dump would have been pretty insane. Let's just look at it here. This was big payday down here, and we dumped like a hefty amount, right? 83%. But if the LA never staked, a lot more speculators would have gotten a lot more coins and dumped the price down further, and we wouldn't have had this good recovery. So if he was to launch mainnet right here without any announcement, once again, those speculators wouldn't have as much coins to dump on either side, right? Firstly, they wouldn't get a good entry on Pulse Chain. They wouldn't get a good double, so a sell on PHEX side, and we won't get a large dump on the EHEX side. Literally only upside. Not only that, why did they have an internal testing phase when they didn't have an internal testing phase during V1 or V2B testnet? Yeah, so what's up then top? Let me guys know what you think about that. There were more reasons, like why he, yeah, that's those I can think of currently. So we do have a weekly print here. Maybe we can pull up the cipher on CoinTrader Pro. This is another charting. But yeah, this price is not right here. So that's all of the data. See if they do have the cipher up here. No. Okay, so no custom indicators either way. I think with that being said, but he did say he would give people notice. Yeah, actually, maybe we should search for that, because he said maybe a 2-day notice, and we've had 2-day notice of the V2 or the V3 testnet, right? In quotes, right? So maybe version 3 is the mainnet, and he's given us 2 days warning if the syncing of the nodes, that there's recent updates that we've gotten, are 2 days before the release, right? Yeah, he mentioned he would give a heads up. I think he'll just launch V3 for now. Yeah, he could launch V3 and then move into mainnet without notice. Could be. But you would have to sync the nodes and everything. I mean, I can't remember us having a syncing last time, the nodes syncing in the previous 2 versions. Like he never shared graphics like those. We just got the Block Explorer, and everybody thought that the Block Explorer was syncing the nodes, because the Block Explorer still shows the same thing, fetching index coins or something like that. If you guys have looked at the Block Explorer recently, and that's what everybody speculated, but that was not at all what happened, because it's still syncing to this day. So it's lots of weird things. I mean, I'm not going to go out and make a call. It does make sense to stealth launch it. Right? It does make a lot of sense. You won't get all of those speculators that would now run to the hex price, right? Yeah, Raymond agrees with me. So yeah, I'm excited to see what happens. I won't be surprised if it's just another testnet. But I won't be surprised at all if it's actually the launch. So yeah, but with that being said, please subscribe, like the video, and I will see you guys tomorrow. Jaggy says, I think he's purposely making it confusing so the vampire attackers can't speculate. Yeah, I mean, that would count for both. That would count for the V3 testnet or simply just mainnet, right? It would be, because if he comes out and is outright bullish, everybody's going to swallow their words. But if he launches it now, those like Joker, Jack Levin, Trevon James all will have to swallow their words and their pride, right? It would be the best way to do it. So yeah, I mean, the guy is pretty much a genius, so we'll see what happens. So yeah, thank you guys